In this lecture, I'm going to talk to you about two different filing statuses available to you as a married couple, married filing jointly or married filing separately, and which one to choose. If you choose married filing separately as your filing status, your tax rate is generally higher than on the joint return because you will not be qualified for a number of tax benefits because special rules apply. Let's take a look at the second page of your Form 1040, the final document software generates when you're done preparing your taxes. You cannot take the credit for child and dependent care expenses in most cases if you choose married filing separately status. You cannot take the earned income credit. You cannot take the education credits, American Opportunity Credit and Lifetime Learning Credit. Your other credits are reduced: the child tax credit, the retirement savings contributions credit, the deduction for personal exemptions, and itemized deductions. Let's take a look at the bottom of the first page of Form 1040. You cannot take student loan deduction and tuition and fees deduction. Why is this important to you? Let's take a look at the second page again. See line 44? That's where your tax after subtractions made from your income is calculated. So all those things, the student loan deduction, the tuition and fee deduction, itemized deductions, and deductions for personal exemptions are subtracted from your income to arrive to your taxable income. And your tax is calculated as % of your taxable income. So all of that is either disallowed or reduced. Everything that is disallowed, I put black arrow toward, and everything that is reduced has red arrow toward it. After your tax has been calculated, there are a couple of credits that could reduce your tax even more, but some of them are disallowed and some of them are reduced. Finally, on line 63, there is your total tax. After the total tax is calculated, there are still a couple of reductions that could have happened to your tax if you chose married filing jointly, like earned income credit, additional child tax credit, and American Opportunity Credit. All of that means lower tax bill, and that's what you're shooting for, right? Let's take a look at your standard deduction. If your spouse itemizes deductions, you cannot claim the standard deduction. If you can claim the standard deduction, your basic standard deduction is half of the amount allowed on the joint return. Take a look. If married filing separately is only $6,200, which could be subtracted from your income, married filing jointly allows you to take out $12,400. So definitely you feel like you're penalized if you are filing married filing separately, because none of these benefits are allowed. However, there are situations in life when married filing separately is the smaller evil, because your spouse, before she or he married you, could have had some debt, some taxes that they didn't pay. You don't want to be responsible for that, do you? However, keep in mind that all of these differences will apply. So now you know what filing status to choose. You can make your educated decision because I just explained it all to you.